morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for March 14th. Happy Friday to all. Mostly lower but quiet trade overnight as corn is backed up 2 to 6 cents, let's call it. Wheat is now steady to 3 lower. The soy complex is mixed. Beans are down about a penny, and old crop up about a penny, and new meal is down $1 to $2, while bean oil prices have seen a little bit of a rebound, up 20 to 25 points. Speculative traders yesterday, there were buyers of pretty much 4,000 to 5,000 contracts across the entire ag space, with the exception of bean oil, where they were net sellers of about 2,000 contracts. I would not expect this afternoon's CFTC commitment of traders data to show a huge change in speculative holdings like we've seen here in recent weeks. I do expect to see money managers having extended their long position in corn back up to about 250,000 contracts, still short about 25,000 beans, 77,000 meal, and 72,000 in Chicago wheat, with a long position in bean oil holding pretty much near the 10,000 contract level. After the close yesterday, the Buenos Aires Grain Exchange did state that the recent widespread rains from late February and into early part of March did increase production prospects for both corn and soybeans. That was contrary to comments the previous day from the Rosario Grain Exchange. Despite these comments, however, they left their production forecasts unchanged at 49 million metric tons for corn and 49.6 million metric tons for soybeans. Both well above their counterparts at the Rosario Grain Exchange. Corn harvest has advanced less than 2% last week to only 8%. However, that is above the 3% pace from a year ago. Bean ratings did show a 1% improvement to 74%, good to excellent. Moving forward, forecasts in Argentina do show a return to hot, dry conditions, which is expected to aid harvest efforts moving forward. Forecasts in Brazil are also mostly favorable for the development of their second corn crop. However, we'll need to continue to monitor dry conditions in the east to see if they spread or shift into that center-south region, which is a big second corn crop area. Much above normal temperatures here in the central Midwest today, ahead of a quick cooling off over the weekend. Very high winds threaten to further deplete soil moisture levels across the Plain States late this week and into the weekend. We'll continue to see a wide temperature swings really over the next week to 10 days. Rains over the next week are expected to favor the central and eastern corn belt, with blizzard warnings across the portions of the northern Midwest. Still really no meaningful rain for the southern plains over the next week to 10 days. Corn has backed up even further here, having traded below yesterday's lows, however, holding above the lows for the week. I look for good demand despite the tariff noise to keep spot prices above that 450 level through the end of the month, and then the next big USDA report. I still look for old crop stocks to dip below 1.5 billion despite no change from the USDA this week. Inside trade across the bean complex overnight. Solid bean exports yesterday. Spot meal prices are back below both their 50 and 100-day moving average, remaining kind of range bound here. As expected, big bean oil sales yesterday were not enough to prevent from making new two-month lows for spot futures. Bean oil product value did dip to a new low for the year, holding just above 40%. And in wheat, particularly Kansas City wheat, they're injecting a little bit more weather premium as the U.S. crop is set to break dormancy. Export sales yesterday were the highest since last June and the second highest of the marketing year, as global buyers did take advantage of the recent price break. So thank you for listening, everyone. I hope you have a great day and a great weekend.